Everyone, hope everything is going well. While the markets may be pumped up towards the end of the year because of fiscal stimulus by China, fiscal stimulus by the Federal Reserve, there are some patterns showing some signs of concern. All right. So this is NYSE Breadth Thrust, and this guy financed a lot. Take a look at his work, but he's looking at similar patterns to 2019, 2020 to right now, 2024, and what looks like early 2025. And you see like pattern over here and also on some charts down below. And the patterns, you may be like, okay, well, that's, what Finner says past performance is an indicative of, what's going on right now. Okay, fine. And he looks at like NYSE summation, I mean McLennan summation index, and he notices a similar pattern. Okay. Now, once again, just because you see a similar pattern out there in the McLennan index, and if you look at RSI, that doesn't mean anything, right? Now, Zyberg Henrik Zyberg, he does a lot of good work, fundamental technical analysis. And he thinks there's going to be a blow up top S&P 500, 6,100. And if you go back to what I was saying a couple of years ago, I said, hey, look, 6,000. Now, I've been slowly getting out of the market since May and June. I still have bullish positions, but I do have, starting to accumulate some puts, right? Trading and long-term outlook on my end. And what he noticed is that, hey, Fed cuts '07, Fed cuts 2024. What happens? Last time was hard landing, 2007, hard landing. He thinks will happen now. And we had higher employment, every time right before the recession started. 2001, 2007, 2019, 2020, looks like 2023, 2024, like unemployment is slowly rising up. And they revised job numbers to the downside a month ago. I don't believe the 254,000 job report, but that's what Wall Street uses. Remember that. Just because you don't believe it, that's what the data they look at. And then when it gets revised downward, they react. Okay. That's just the nature of the beast. You can complain all you want, but that's how it is. Okay. So we're seeing a similar pattern out there. Okay. In terms of that. So I think we're going to get a pump before the dump. And right now, from a trading point of view, like some of these Chinese stocks right now are ridiculously high. And I expect a pullback. And Seth Golden, he says the put call ratio finished at 0.48. And, every time you saw this in the last year, it hits the low, you tend to see a market pullback. So with this market pullback, I do believe there will be buying opportunities, not telling you what to do, what to buy, the whole 9 yards. Okay. But, you know, I have noticed sentiment is starting to get a little more frothy. Why, in May and June, I said you can't have a crash, or my mind was changing at the time. I was like, hey, look, the sentiment isn't excessive. Okay. Now the sentiment isn't excessive, but it's moving towards that direction. And once you get towards that direction, like Chinese stocks, for instance, that's frothy like crazy. I do once again think that those stocks will go even higher the next few months. First you get a correction, then next move up. Trader sees, oh, it hits the VWAP, whatever they call it. And then, they're gonna pump it up. More Chinese stimulus, more Federal Reserve stimulus. Okay. Wanted to leave you one last thing with finance a lot. I really like this guy's channel. He doesn't get into politics a bit too much, for me. I'm just looking at finance stuff. I'm looking at charts. I'm not looking at whether or not you like Trump or Kamala, whatever. But anyways, it's important to see how the Federal Reserve pulls liquidity from the banking system to trigger a crisis. In 2020, the Fed reduced the emergency repo by 110 billion, 44% over 8 weeks. BTFP has been reduced by 29 billion over the 2 weeks, targeting zero on 6 November 2024, one day after the election. I'm just thinking that, hey, look, so is he talking about 6 weeks on 6 weeks? And, it's this chart over here. And so he's saying the BTFP, I'm not even following this, but he's saying that, hey, look, when this thing goes to zero, bada bing, bada boom, this thing is gonna rock and roll. And he's looking at what happened in January, and bada bing, bada boom, you saw liquidity diminish early parts of the year. When you see liquidity diminish, you get less money getting pumped in. So just looking at all of this going on, yield curve right now is uninverted. It may go back to uninverted, but it'll, excuse me, it's uninverted now. It'll invert, and then I think it'll uninvert, and then bada bing, bada boom, whole house of cards come down. So the sentiment pump seems to be there. And, after this next pullback, you're probably going to see crazy mania like you saw in the Chinese stocks. It's going to head out everywhere. And that's when a lot of people are going to like start name calling, pointing at me, saying, oh, yeah, you're saying recession, this recession, that. That's when I want to start loading up and puts. And I'm starting to see that. No one was saying anything before, really. Maybe like a comment here, a comment there, but now I'm starting to see it. Just just look at Henry Zyberg's chart. It's fantastic. It's like pattern recognition. Fed cuts, hard landing. Fed cuts, hard landing. Fed cuts, hard landing. That's what it looks like. Commercial real estate. I go downtown a couple days a week, and what I can tell you, Monday, Fridays in the buildings, not many people are there. It's dead. Like Wednesday, yeah, it's packed. Thursday, okay. Tuesday. But what I'm telling you is like if you go on the trains at like 5:30, you used to you had to share a seat, going back to the suburbs on the train I take. Right now, no, not at all. It's different. There's less people going downtown. These buildings are gonna get crushed. And it's gonna take time to take these buildings and turn into apartment complexes. That's gonna happen. But there's a transition period before that. You need to liquidate the debt. Once you liquidate the debt, there's pain. The banks are exposed to that. And the messed up part about this is you saw Silicon Valley Bank go under. I believe you're going to have that happen again with other banks, but there will be no bailout. There will be something called bail-ins. You see Bank of America, freezing up with their money. Well, that's a warning sign that they're trying to prepare you for all of that hankus pankus that's about to go down, as I call on my other channel, Hanky Panky. So, anyways, let me know your thoughts. Talk to you later. Bye.